Hola guys, ¿qué pasó? Happy New Year. This is Hala Pablo. Hope everyone had a good vacation, a good break, and I thought I'd do a quick video for you guys. Kick off the new year with a trade that I shared with my group. Was it yesterday? I can't remember, man. I'm getting old. I think it was yesterday. Yeah. So anyway, it was BitDAO. I was going through my watch list, and what I like to do is just scan each coin. I've got about 300 of them on there, and just go through them quickly and look for geometric patterns and all that on different time frames, on the macro and micro, low and high time frames, and also look at the volume. But first and foremost, what I look for are patterns of structural patterns. And so I was looking through there, and I came across BitDAO on Coinbase, and um, and I noticed what looked like horns of the devil forming, which usually come after a series of rising wedges that mark down, because rising wedges are bearish. They mark down, mitigate a lower liquidity void, then come back up, mitigate the higher liquidity void, and then dump again. So I saw that. I saw this mitigation and this structure here. Do you see this? It looks like a bull pennant, but it's got this pump right at the end where it comes straight up. It's usually a single body candle that shoots straight up, and then as soon as it comes up, there's stopping supply, comes back down, and in the form of a shooting star. So I noticed that right away, and I looked at it, and then I did some more. I did a more in-depth biopsy on it, and I drew out the ascending wedges, and I saw the liquidity grabs at the top of the rising wedge where it came back down and formed kind of like a symmetrical, pumped back up and mitigated the well, if this is the selling climax here, then it would be like kind of like the automatic rally area at the beginning of the range, mitigated it, and then we had that a pump, but with not a lot of demand in it. So those are often FOMO pumps or false rallies. And I saw that, and so I said, you know what? I've got to go to my in-laws because we were celebrating New Year's, and I'm like, I'll just share this chart with them. There are a couple others that I shared, but this was the main one. And said, I drew out the Fibonacci on it, and I was like, this is my experience is after you get horns of the devil after a liquidity grab mitigation, uh, and then with a shooting star to follow with stoppage supply coming in. This was on the 2 hour. Usually it means it's going to mark back down and the prices are going to fall. This is a top. And so I drew out the 1.272 to the 2 fib, and let it go, and updated it, gave it to my group. Happy New Year, guys. And went and celebrated, did the obligatory, meet the family and all that, in-laws, my wife's in-laws. My wife is Hispanic, so she's got a huge family, and our tradition is we do Christmas and um, New Year's together. So I knew I was going to be gone a while. So anyway, but I came back and I saw that it actually distributed like I pretty much knew it was going to, and I thought I'd just show you this. This is the actual chart now, real time. This is today. So yeah, like I said, what clued me in was this pump, and this is a mitigation pump, and then it came back up and formed this tight consolidation with a narrowing spread. Now, we had this big demand volume spike here, series of them, but if you look at them, and this is what's so good about if you learn how to do volume spread, we can clue you in and kind of see the poker hand of the market makers. A lot of people bought this. A lot of people bought into this pump, and even up here, we're seeing abnormally supplied large demand, not supply, but demand coming in. Let me see if I can get a brush here. Especially here. Now, this was after the peak. This was after the top of this rally or this pump, which would be here. But if you see, there was decreasing demand. Demand is falling as this price consolidates. And so the question is up here, is this a reaccumulation? Is it going to continue to mark up, put up another leg, or is it a top? Is it a top? And one of the ways you can tell that it's what I call the devil's horns, or the horns of a devil, which is a top with a FOMO pump, a scam pump right at the end. That makes this last horn here, which is really a shooting star, is the decreasing of demand after a gargantuan volume spike. We have this big volume spike, and what this does is it entices FOMO traders to come in and buy. And so there's a lot of buying going on here, a lot of buying. And so, you know, if they're buying, what are they buying? You have to ask, what are the FOMO traders, what are they buying? I'll tell you what they're buying. They're buying exactly what the market makers are selling, knowing that they're fixing the pump. So they're going to leave them high and dry up here with a bunch of, well, supply. They're about to do a supply drop. And so you see these large acquisitions, these large efforts of accumulation. It's actually the market makers are selling. And this is the amount of buying that's going on into oversold crypto, because their intention is to dump the product, dump the asset, dump the commodity, dump the crypto, dump the stock, whatever it is, it's being dumped. And you see these kinds of structures taking place in all kinds of markets, not just crypto. It's not just native to crypto. It's native to, you know, wherever things are bought and sold, and the emotions of greed and fear are factored in, you're going to see these patterns take place. And so that's why I'm always preaching pattern recognition, more so than RSI indicators, more so than MACDs, more so than moving averages and Bollinger Bands and Ichimoku clouds or whatever. I'm not knocking those things, but really what is chief, if you really want to trade and you really want to position trade, swing trade, and you want to do it like the banks do it, you want to do it like the syndicate traders do it, the professionals do it, learn pattern recognition, price action volume. And then you can go back and you can verify what you're seeing or confirm what you're seeing through the usage of indicators. Indicators should confirm what you've already identified in the price action and in the volume. And if you draw your trend lines, you draw your trading range, support and resistance, you do those accurately, those regression trends, those act as extremely, extremely effective RSI indicators to find out whether a product is or a crypto or whatever is overbought or oversold. You can go off the micro and macro trend support and resistances. So that's what this is. And you can even see, if you look, the rising wedge. Here's another pattern you can look at. Let's see. Let's do kind of like a trend line here. See, let's say this thing hasn't distributed yet. You kind of have like a rising wedge coming up in here, where this was cut off. This came back down. It jumped the micro resistance, came back down, formed the shooting star, and that's pretty much, you know, lights out. That's the end. And so rising wedges are what? They are bearish. So yeah, so this distribution here came as no surprise, and then it completes the top of this this range, which I call the horns of the devil. We kind of see another one down here. This is another one that came out of this rising wedge. See? This is an ascending or rising wedge, and this was an ascending or rising wedge. And you see a series. These are actually shooting stars. When you see the upper wicks of these supply candles coming in after a pump, after it breaks some kind of resistance, but you don't have the corresponding demand volume. See, there's no demand. There's very, very low volume. So when you're seeing these resistance breaks, or these, you know, and they're you think it's going to flip it to support, but you don't see corresponding demand volume, it's usually a false rally, guys. It's usually a scam pump. Especially if you've gone back and done the VSA on this whole range building up inside of this wedge. First of all, you got a rising wedge, so that's bearish. And then if you're looking at the volume spread analysis and you see like during these you see these Elliott waves, these 1, 2, 3, 4, 5s here. If you look at the 2s and the 4s of the Elliott wave, which are corrective waves, the 2s and the 4s, you should see supply building, and then on the 1, the 3, and the 5s, you should see demand ever so slightly decreasing. And that's telling you that the overall bias of this range is bearish. As you know, if you see supply building, anytime you see supply building up, especially like in a downtrend like this, in a zigzag, these waves inside, you see supply building. See, here's supply predominance, here's supply predominance. I have this on the 2-hour, but if I take it into the 30-minute forensic, it really begins to stand out. You just have to kind of blow it up a bit. Of course, you don't get the full picture because the times have been compressed, but you can see the supply predominance here and down here and down here also. And where you see these big demand volume spikes, usually in areas where the price action is touching the micro trend resistance, which is the top of this wedge. And there's a lot of effort. See, they're larger than normal. Actually, they precede, as far as volume, all the supply spikes that came before it, except for like maybe this one here. And yet, with all of this effort, there's very, very little result. The result certainly doesn't enable it to propel through the micro trend resistance and continue pumping. So these are all failure to rallies. So every time you see a large green spike, a demand spike, but you don't see a lot of corresponding action, the price action, look and see where that juncture is taking place, and see if the rally was stopped before it even started. And those are failure to rallies, and that is the market makers selling off. As soon as the price hits a crucial juncture, there's a sell-off or there's a supply block. You can see it right here. There's a supply order block here, and the price dumps back down into the wedge until it's time to break structure. And when it breaks structure, especially if it's an ascending wedge, the market makers aren't stupid. They know that these are bearish trading patterns, so they're expecting everyone to short. So what do? They do the opposite of herd mentality. They pump, and so that's exactly. But you see, they want to keep their hands revealed. I mean, concealed with the poker hands. But you look at the volume spread analysis, and it shows that this pump here happened on hardly any volume, so it's low volume. So it's a scam pump. It's a FOMO pump, and it's coming back down. And you can even kind of guesstimate how high it's going to go. It usually goes up to the automatic rally of the beginning of the range, where it mitigates before it comes back down. And when it comes back down, it comes down with a vengeance, as you know. And it breaks structure, goes all the way back down to form a new low, and then the low that it forms usually goes and mitigates the spring or whatever. See this here. This is the sign of weakness or spring, where it's low. This this shakeout, it mitigated this as well. So you have a double mitigation on the macro and on the micro, and on the top and on the bottom. So anyway, all right, I ramble. But yeah, these are some of the things that I look at and I talk about with my group, and we discuss, and I teach, pure volume spread analysis, pattern recognition. Here's one I just closed out, metal. See here? You can just look at it. You don't need an RSI. I could look at this, and I could look at the volume here, and I could see that this is a rising wedge, and it's got demand building up. Look at all this effort here with this demand. These are huge freaking demand spikes. But what's it doing? What's the price action doing? Is it in correlation to the effort? Is the result worth, the effort? Is the effect worth the cause? The cause and the effect have to jibe. And if you're getting massive Herculean effort like this, but little result, you know, the result isn't enough to propel it through the wedge and to form a rally that goes all the way back up and mitigates these upper supply blocks. No, it's coming back down. And so this right here with the rising wedge shows me that there's some trickery going on here. There's some manipulation. And so, yeah, I said if it does pump up, it's going to mitigate this area here, this high point. This pump that came right back down, this single body pump, it's going to liquidate it, and then it's going to dump. And so if somebody wanted to dollar cost average in metal, then they could use these Fibonacci retracements, the 1 through the 2 retracements, as DCA points. And what did it do? Well, you saw what it did. It came all the way down, almost to the 2.0. Actually, I think it wicked the 2, just where I said it. And then it came back up to the liquidity. So instead of hitting the liquidity, it went all the way back down, then hit the liquidity, then came back down. So there are different variations of how the market makers do this. You just have to be flexible. And like I said, the main thing is pattern recognition, knowing where the price is going and drawing out your barriers, your liquidity grab supply blocks on top, and your Fibonacci retracements on the bottom, and just see where it goes in between. If it hits the liquidity void first, then you know it's going to come back down and you could start buying in at your dollar cost averaging points. And if it hits your dollar cost averaging points, you could actually milk it all the way back up, knowing it's going to pump back up to the liquidity void and grab more liquidity from the because it needs to liquidate all these shorts. So it's coming back up, and then it burns the bulls coming back down again. So it slaughters the bears, and it comes back up and kills all the bulls and comes back down. So this is a very treacherous market that we're in right now. And so that's why on both sides people are getting killed. You have to know how to trade. You have to know how to get in and get out, when to get in and when to get out. And I hope I'm sort of teaching you that with this channel and these videos. All right, this has gone on long enough. Let me let you go. My name is Hala Pablo. Thank you for tuning in, and yeah, check out my TradingView profile. If you really want to take your trading to the next level and you want to learn volume spread analysis and learn how to trade like a syndicate trader, like a market trader, I do this all day. I've been doing this for 6 years full time. So you're welcome to like, subscribe. I also have a trading group, very, very affordable, to distinguish myself from the groups that overcharge for bots. Bot signals. You know, that's why I stay away from Telegram and all that stuff. But you're welcome to check it out. I make it extremely affordable. And if not, I mean, you could still prosper just going off these free videos. So anyway, all right, guys, let me let you go. Talk to you later. And you have a good one. All right. Adios. Bye-bye.